we're in a regime where the market is deciding whether we have a recession in the U.S. That's going to put a lot of doubts about Asian markets, right? So I think we're very cognizant of that. I think in the second half, we're likely to face additional relatively high volatility in the region. But I would like to note a few things, right? Perhaps points of resilience. First, Asian inflation is generally lower than that of developed markets. A lot of these commodity prices will help some of these markets here, like Indonesia. And the external balance of payments in Asia is still roughly, relatively resilient. Even the weakest economies here can handle about 2 years of short-term external liabilities. So I think the general picture is that we're likely to see more volatility and some trading weakness as we discover how long and deep this U.S. downturn might be. But then, I think Asia is likely to be relatively more resilient compared to other regions.
Well, you say that Asia's inflation problem may not be quite as bad, but, with the dollar at these levels and looking like it may yet go up and prices of natural resources also may be still going up, that could get a bit worse, couldn't it? I mean, we've got MAS speaking this morning, and the MAS is not particularly optimistic right now.
Correct. I think the dollar has, gotten to a 108 level in terms of DXY, and it's since traded down a little bit, even though we haven't really seen that much move in the yields. In fact, the yields ticked up yesterday, but the dollar still weakened. So I think that, in terms of the positioning, there's quite overwhelming amount of bullish dollar trades. And I think, sometime in the second half of this year, the type of economic weakness that's getting priced into the market is going to put a cap on the dollar. Right? And I think, the way down might not be as dramatic because I don't expect the Fed to turn to easing just yet. But I think the additional upside, the additional pressure for Asian currencies to weaken, I don't think it's really that strong. And when we talk about inflation, right, a lot of the inflation problems here in this region is food. Being a very big part of the CPI, their respective CPI baskets. But, you don't deal with food inflation by tightening monetary policy, right? You use fiscal policy and administrative policy to improve the supply chain. So I don't think central banks here are really in a rush to catch up with the Fed.